Now, from a group perspective, we also reported total year-to-date group revenues of $20 million. Now, this includes royalties and milestones from our global partners. And based on our internal estimates, we expect that the total revenues to meet or beat our covenant target of $31.5 million for the full year 2024.
All right, welcome back inside our Proactive newsroom. And joining me now is Anders Lundstrom. He is the CEO of Shield Therapeutics. And Anders, good to see you. How are you?
I'm very well. Good to see you again, Steve.
Yeah, thanks very much for being here. And also your CFO, Santosh Hanbag, is here as well. Santosh, good to see you also.
Good to see you, Steve.
So the company is out with some positive trading numbers. We'll talk about that in just a second. But first, I thought it'd be a great opportunity, Anders, for you to tell us a little bit about what Shield does and a bit more about the company.
Of course, of course. So we at Shield Therapeutics, we have one commercial product, and the brand name is Accrufer or Feraccru, depending on where you are in the world. It's Accrufer in the US and typically Feraccru in Europe. It's an oral iron for adults with iron deficiency or iron deficiency anemia. So Accrufer or Feraccru has a novel mechanism of absorption compared to other oral irons. Has been shown efficacious and well-tolerated therapy in many studies. So you see typically 60 to 70% of all patients with iron deficiency using other oral irons experience gastrointestinal side effects like stomach pain or constipation and stop their therapy. So we're different as Accrufer is not absorbed in the stomach, but rather in the upper intestine, and thereby avoiding some of these gastrointestinal side effects to a much larger extent compared to other oral irons. So in the US, our largest markets, we sell and market directly with a very strong partner, Viatris, and together we have 100 salespeople selling Accrufer. In the rest of the world, we work via distribution partners. Feraccru is launched in the UK and in Europe, and the next market to launch the product is Canada.
Okay. Santosh, as I mentioned earlier, you put out some positive trading updates. Tell us a little bit about the highlights that you're seeing from those.
That's right, Steve. We are very pleased with what we have been seeing with Accrufer's performance in the United States. During the third quarter of this year, we reported net revenues of $7.2 million from approximately 43,500 prescriptions of Accrufer, and with an average net selling price, or what we call NSP, of $167 per prescription. Now, this represents about an 86% increase in prescription year over year, and a 20% increase in prescriptions compared to the second quarter of this year. So excited. Revenues similarly grew 76% year over year and 4% compared to the second quarter of this year. Now, the difference in the growth rate between revenues and prescriptions was due to the impact of wholesalers buying ahead of the July 4th weekend during the last week of June. So adjusting for the summer buying pattern, the sequential growth rate would be identical to the prescription growth rate of 3%. Similarly, on pricing, adjusting for July, the NSP was $192 per prescription compared to $171 in Q2. And our expectations are that the NSP continues to be maintained at these similar levels or even higher throughout Q4. So this is a strong testament, I would say, to the collaboration and the work between Shield and our partner that Anders mentioned, Viatris. Now, from a group perspective, we also reported total year-to-date group revenues of $20 million. Now, this includes royalties and milestones from our global partners. And based on our internal estimates, we expect that the total revenues to meet or beat our covenant target of $31.5 million for the full year 2024. That is under the debt facility agreement we have with SWK funding. And finally, and importantly, we also highlighted steps that we have undertaken to strengthen our balance sheet, extend our cash down this morning.
Yeah. On that additional financing part of it, in the news release, you talk about AOP and Sallyport. Can you give us some more updates on this particular part of the update today?
For sure, Steve. As you may have seen in our press release, we exited Q3 with $7.7 million cash on hand. Now, upon evaluating our internal projections and our cash burn rate, the board has concluded that we will need A, to lower our operating base, and B, access additional capital to help achieve our goal of getting to cash flow positive by the end of 2025. So we have three key priorities that we have that we have undertaken. Number one, we're implementing a cost reduction of approximately 10% to our operating cost base across the company. Number two, we're implementing an expansion of our current working capital financing with Sallyport from 10 million to 15 million. Now, keep in mind, that's not new money. It's our own money that we collect faster. We believe both these initiatives should help us extend our cash runway into the second quarter of next year. Number three, we also entered into a non-binding term sheet with AOP Health, our largest shareholder, for a minimum of 10 million of new equity-based financing. The details of this term sheet have been shared in the RNS this morning. This can help us achieve enough capital to get to cash flow positive by the end of 2025. Now, obviously, our rate of cash burn remains highly dependent on Accrufer's performance and meeting our internal targets.
Yeah. Anders, that's a big statement to say you're going to be cash flow positive, hopefully in 2025. That's a real positive for the company.
Yeah. No, absolutely. But I mean, by continuing to execute on the plan we have, which we know works, and as we just then announced, net sales, total prescriptions, and the net selling price of Accrufer are all showing positive trends. And also what Santosh just mentioned, is strengthening our balance sheet and a very tight control of our cost base. We will continue to build momentum behind Accrufer and make the steps required to transition to cash flow positive by the end of 2025.
It's going to be an exciting next 6 months for sure. First off, Anders, thank you so much. Good to see you again.
Thank you so much, Steve. A pleasure to meet you again as well.
Yeah, and Santosh, nice to see you.
Nice to see you too, Steve. Thank you. Appreciate it.
Yeah, there's Santosh Shanbhag and Anders Lundstrom, both with Shield Therapeutics.